So what we've observed over the last 6 months is that the US Magnificent Seven stocks, that is the largest technology companies in the world listed in the US, have actually traded a long way down. And currently they're trading at some of the lowest levels or lowest valuation levels that they have in many, many years. And I guess the obvious question is, well, why has that happened? And I'd say the key single reason is that investors are really starting to turn a little bit cautious around how much capital investment these large companies are making into data centers to support the AI build out that's going on. And over the last few years, these companies have funded that capital investment out of free cash flow, but they are now starting to dip into debt, which is not a problem as long as the returns on that investment that they're making in data centers and expanding their AI footprints is positive and is good. Now, the question about what level of return these companies are actually going to generate still does remain open-ended. And so what we think will probably happen over the next year or so is these companies will start to dial back some of that CapEx, or at least reduce the growth rate of the expansion of that capital investment. So if that was to happen, we think the market would see it as a prudent step. The other thing that they could demonstrate is what sort of returns they are generating on that capital investment. And if they can demonstrate that they're making, low double digit, mid double digit returns on that investment, we think that that would be very well received by the market as well. The final point I'd make on these big companies is that AI is a future growth driver, and they still have very large existing businesses that are generating significant amounts of capital, or significant amounts of return on capital, which are really unrivaled. So they don't really have much competition in their respective marketplaces. So I think that's sort of our view on it. And because the valuations are so appealing, and because they do have such strong current established businesses, and they have the AI optionality, we think those three things position them really well. And if they can just adjust their capital investment and demonstrate return on investment from that, we think the market's going to, reward these companies, and that will be the catalyst for valuations to move higher from where they are right now.